Welcome to Trading Forex and Futures. I want to get right into this. As many of you know, I started this according to Ecclesiastes, where it talks about having multiple streams of income. And my goal is just to educate everybody on trading and how it can be a entryway into multiple streams of income, especially for those business owners or those entrepreneurs or people who don't necessarily have an income. I think trading is a great way to start. So let's straight into it. I want to do a little bit about me. And I started trading in 2023 after finding a YouTube video of a $1 million trader. And it was so motivating to me that I decided to join this person's mentorship right away. Unfortunately, the mentorship did close down, but I was able to build relationships with the trading educators within that mentorship. And one gentleman in particular, he was like a 20-year-old millionaire. I decided to let him mentor me for about 6 months. And as you can see in this first picture here, I deposited $100 and then I made $100. And this is when I didn't even know what I was doing. So it was very surprising to me and I was hooked from there. Unfortunately, I wasn't able to stay consistent. So I was in and out of trading. I was starting a brand new job after transitioning out of the army. I had my youngest, so I wasn't able to take it seriously up until I would say about last year, 2024. And the middle picture here is after I prayed a prayer. I asked God to help me make at least $200 a day so that I can eventually replace my income. And God showed up, showed out, and confirmed that I believed that I was supposed to trade. And this last picture here is one of my biggest trades at the time, but I have since topped this for a couple of weeks now, and it has just been a great, fun journey to be on, and I just want to help other people do the same thing. What is Forex? What is futures? Starting off, I would say both markets draw in a diverse mix of players: solo entrepreneurs, traders, retail traders, big institutions, governments, banks. These people, we are all looking for exposure, opportunities, and chances to profit. Okay, Forex is all about exchanging the currencies directly with no set end date, while futures involve trading contracts. These are fixed terms, fixed margin requirements, and expiration dates. So these differences between these two markets will affect your approach in liquidity and overall risk. Both markets run nonstop from Monday to Friday, so there's plenty of opportunities to make some money, and they are ran in a set of 3 sessions: New York session, London session, and Tokyo session. So there's always an opportunity to earn money. Okay, so I wanted to share really quickly what the things you will be seeing on the Forex and future side. The first one is Euro dollar versus the US dollar. This is one of the most traded currency in the world. It's super liquid and actually less volatile, so it's easy for beginners. And then we have the Canadian dollar versus the US dollar, which can be heavily influenced by the economic ties between the US and Canada, of course, and in particularly the energy sector. So oil prices are actually affected by this. Now, I want to share on the future side some of the things that you might see, which is platinum, copper, natural gas, and not listed here is crude oil, which is another one that I really like to trade. And these are commodities that you would be trading on the future side. Now, both markets do offer the NASDAQ, which is the index of 100 stocks in the stock market. So you can trade that on both the futures and Forex side. Gold you can trade on the futures and Forex side. Silver, which is not listed here. So there are similarities between the two markets. And then there's the things that set them apart. So I cannot trade platinum with a Forex broker. And I just wanted you guys to see the things that you would be looking at. How would you actually get started trading? First, you're going to need a laptop, tablet, or phone, and then you're going to need reliable internet connection, and then you are going to need a demo account for practice. Now, a demo account is exactly what it sounds like. It's demonstrational trading. You are basically in a stimulated, you're trading with stimulated or fake money, but you're trading real live market data. So it's a live market. that you will be trading, kind of to build your confidence and get the blood flowing and kind of understand how the market moves. But it's not real, it's fake, and it just really helps with building your confidence. And I suggest everybody trade demo when they're first starting out, and don't try to trade with real money, because that's just not wise. So you can react to the market changes and everything in real time, but it's a way to gain experience without actual financial risk. And then lastly would be a trading view account, which is where you can analyze the market and make your informed decisions. This is where I do all my charting, and it's really great. And it's only $16 a month, and which is the minimum subscription, and then the free plan, which is also really great. Okay, I want to go over the types of traders because this could depend on your lifestyle. So when I first started trading, I was a scalper, and this was only because I didn't have that much time to be in the markets. So I was in and out of the markets for a minute or two or five, and it was just a really short amount of time. That $100 that I made, that was in a short amount of time. Okay, I was scalping. Now I would consider myself a day trader. I try to close my trades within the same day. I just prefer not to have a mental tax. I want to spend time with my family and sleep and all the things without having a trade open. So now I would consider myself a day trader, but I saw a lot of success swing trading where I was holding my trades for a couple of days. Now a swing trader can hold their trades for up to weeks. I just never got to that point. But it was really nice to just open up a position, walk away from the charts, live my life, and then come back to see how the trade played out. So I suggest that beginners start with swing trading because it gets the momentum going, but it's just super chill and it's just a good time rather than having your heart beat really fast scalping in the markets. But it's really up to your own personal preference and your own lifestyle. Candlesticks were created in Japan in the 1700s to show who controls the markets, either the buyers or the sellers. And these patterns that the candlesticks makes, they reveal shifts in momentum and possible reversals. So an American named Steve Nyssen introduced this method to the Western world, and it became a core part of technical analysis because it gives a clear visual picture of market sentiment. Market sentiment is the overall feeling of traders when what the feelings that they have about price. So when confidence is high, the traders expect the price to rise. The sentiment would be bullish. And then, for example, the traders expect the price to fall. The sentiment would be bearish. Now, as we delve into the concept of picking your edge, we're essentially looking at two primary approaches, which is technical analysis and fundamental analysis. Starting with technical analysis, this method is about the price charts, okay? Picture it as a way to react to the market's mood through trends, highs, lows, support, resistance, and that's all vocabulary that you'll learn as you continue to trade. But the key takeaway here is timing and knowing precisely when to enter and exit the market, managing your risk effectively, etc. Okay. Shifting gears to the fundamental analysis, this approach digs deeper into the why, quote unquote, why behind price. It involves studying economics, company performance, and global events like interest rates, economic reports, global news. And the goal is to understand the direction, predicting whether the price might fall or rise based on these underlying reasons. I think technical analysis and fundamental analysis each have its own unique strengths, and I love using them both together. But my preferred way is just technical analysis, which is looking at the history of price over time and then using that as a way to place my trade. You're going to see when you open up TradingView, it looks a little unfamiliar, but you can see those green and red candlesticks that I was talking about. You see the currency, which is New Zealand dollar versus the US dollar here. I have some other currencies and some other things that I like to trade over here on the side, as well as some more market data for New Zealand dollar versus the US dollar. So if I were to click buy here, that would be in regard to the strength of the US dollar, and I want the US dollar to essentially outrun the US dollar. And then if I were to click sell, then I'm betting that the US dollar is stronger than the New Zealand dollar. Now this might look completely unfamiliar, but I promise you the market is easy to read. The market only goes in 3 directions: up, down, and sideways. When it's going up, you want to buy at the lowest point. When it's going down, you want to sell at the highest point. And when it's going sideways, you want to stay away from the market. Now, there's so many different ways to analyze, and there's different strategies when it comes to trading. And I'll be able to personally help you and teach you my own personal strategy. But I promise you, trading is not hard. Now, I want to address what most of you may be asking, which is, what if I don't have a lot of capital? I typed this in to ChatGPT for my personal account, and this is an example of a $500 account. Let's say you have $500. The return, the rate of return for a $500 account compared to putting it into a high yield savings account is 20% versus about 4 to 5% annual yield, roughly, for a high yield. So let's say if you do 20 trades per month and you are at a 50% win rate, your net profit would be $100, which is a 20% return on your $500, compared to putting it into a high yield savings account and it only getting $1.50 to $2 per month. Okay, so trading is worth it to me, especially when you learn all of the concepts. And honestly, if you want to dive into this, I would say it would take you 6 months to be a successful trader. And this comes with mentorship. This comes with having time on the markets, and anybody could be successful at trading. Okay, so that's it. That's all I have for this video. I have free resources on my YouTube and Telegram, and then I also offer account management. You would have to email me for that. I offer one-on-one sessions for anybody who's interested. And then January 12th through the 16th, I will be doing a beginner boot camp for people to learn all the beginner concepts of trading if they want to dive in. So I hope I see you guys soon. I love you guys. Blessings to you, and I'll see you later. Bye.